Hello everyone and welcome to Day Trader S&P 500. Today is Sunday, April 30th, 2023. This is Dale Woodson, editor of Woodson Wave Report and Day Trader S&P 500. As always, we want to get our YouTube subscribers caught up with what our newsletter subscribers, in particular our monthly subscribers, receive every day, sometimes more than once a day. There's our subscription services there, okay? You guys can click on those to check those out. But let's go to that the monthly report that was sent out to our annual subscribers here. I believe that's the May monthly. Yeah, it was sent out over the weekend yesterday morning. I wanted to show you guys what we have here since the February 2nd high. I know this is a little bit crowded. There we go. And but I want to make reference to 2 points. In purple, the 11 retracements of over 786 or higher that have held and produced lower lows. It's very improbable. Usually when you get a 786 Fibonacci retracement, the market goes ahead and retraces the entire 100% of the move. But this is unprecedented in my 30 years of trading and analyzing the markets. From the February 2nd high, you can see all of these retracements here. 786, there's a regular 618. We're not even counting that. Here we have 3 of them over 900. Okay, and then a 786 over here off of that ending diagonal on the 18th. And now, as of now, this still may blow through, but we've got a 996 as of, I think it was Friday's close on the 29th. So there's 11 retracements of 786 or higher, and I think 4 of them, let me scroll down, how many of them were, I think there were, let me see here, I had the 900 in there. Anyway, I think there's over 4 of them that are over 900, and these are unbelievable setups because you can put your stop above the 100%, and then your downside is, your risk is just a few points and your reward is huge, huge, huge. The other thing is, since that February 2nd high, we've had no fewer than at least 9 direct hits. The charts get so crowded, I don't know that I keep them all in there. I make room, but I squeeze all these in as best I could. You can see direct hits on the downside and the upside, and the last one was that low right here. It's within 4. Most of them are 1 or 2. Some of them are 3 or 4, but that's what we had there. What else did I want to show you guys? Yeah, the setups there. You had 9 direct hits, and that's in our monthly subscription, which we put out virtually every day, sometimes more than once a day. Let's see if we can get that on a chart here. Let me see if I have that. That's not it. That's not it. That's it there. There's the February 2nd high. I got a little more spread out here. You can see the E-mini futures. The purple is the retracements, the 9s, the red are the 9 direct hits. You can see there into that wave 1 low back in March. This is from the February 2nd high. We got 5 waves down for the 1 with a circle on it, and then we have an A, B, C up. You can see it here. See if we can get that all in there. Yeah, we can show it better this way. There we go. And then we have an A up, a B down, and a C up that ended the larger wave 2 with a circle in it, and that is the ending diagonal triangle with the overlap with wave 4. That was perfect form, really. 1, 2, 3, 4, 5 would overlap, and 3 waves in each one. From there, we got a move down in the 786 and a move down in 1 with a 2 at 996. So again, we'll see if that holds or not. The 41.98 there. I want to get back into our report. I think we have a lot to show you guys to catch up, okay? And then we've got our S&P 500 cash, the daily bar. There's the January 4th all-time high, 5 waves down for A. Let me get this in because I'm going to get these trigger points here. We know that's the cash daily bar, okay? We've got 5 waves down for wave A. We've got a B up. We've got 1 of C down here, okay, and 2 of C up here. This 2 cannot go higher than the August 16th high of 43.25 in the cash. Okay, so that's the key make or break level. You see this February 2nd high of 41.95 in the cash. The The NASDAQ futures broke above this high. The NASDAQ cash has not. The Dow is a completely different count, and the EMinis have not, and the S&P cash has not. They're on the doorstep. They're within 25 points. Could happen tonight in futures, okay? But that's not as critical, okay? This February 2nd high. This is a bigger deal, okay? Because if the market moves above this 43.25 high on August 16th, then that'll trigger the alternate count in blue. Okay, a move above here gives us where C equals A at 43.73, or C equals 1.618 of A at 47.50. Okay, so that triggers, you can see in green there, that's the trigger, 43.25, and that's the targets, 43.73 and 47.50. Okay, so wouldn't get too excited that the February 2nd high was taken out. Okay, that just means this last 786 or 990, whatever it is, retracement didn't hold. Like I said, most of the time they don't, but we have 11 such instances of it holding from the February 2nd high. Let me see if I can get this in here. Yeah, okay, on the downside, the trigger is right here, this B wave low. A move below that B wave low, that eliminates the alternate count, okay, in blue. All right, and then it gives us a signal that we'll be going below the 34.91, which is right down here. Okay, that's the wave 1 low, and a move below that leads to our 33.61 target for wave 3. So you can follow along here. We've got A down in parentheses, B up. Okay, we have 1 of C here, 2 of C here, and it can go higher, but it cannot go above 43.25. Okay, so from that wave 2 high, wave 3 equals 1 at 33.61. And if we look at the bigger picture, wave A down is here, wave B up is here at 43.25, C equals A at 31.43. We have lower Fibonacci targets, but that's the minimum. And again, I've said this in the past, a regular correction in a bull market would be an A down of 5 waves, a B up, and a C down of 5 waves where C equals A. So a normal correction is to 31.43. That's, they call bear markets on TV, over 20%. That would be considered a normal correction in a bull market. Anything lower would be more, but it'd still be an ABC correction. 5 down, 3 up, 5 down. So we'll see how that plays out. But that's the cash on a daily, and let me see if I have that here also. I think it might be, yeah, there's the same thing there with everything on it. Okay, there's the alternate count in blue, and there's the trigger there, there's the downside trigger there, and there's the same targets. Okay, excuse me. So let's get back into our report as we are catching you guys up. Okay, that was that's all of the verbiage there. There's the targets and all that. There's the hourly, excuse me, from the February 2nd high. You can see that's nearly a 100% retracement. As you know, second waves cannot retrace more than 100% of the first waves. So the 41.95 is the make or break for this smaller degree wave count. But again, excuse me, that is not critical. The critical is the 43.25. Okay, we can look at that on the hourly, I guess, here. See if we have it. There is the hourly right there. There are the retracement targets. It's gone above the 786. I think that's 996, 0.9996 if I'm not mistaken. There's the 5 waves down for 1 in a circle. There's the 2 up. And again, that's negated with a move above 41.95, but it's not critical. Okay, let's move on. Let's get to that monthly. We're getting back and forth here. Let's see, what else do we have here. Here we have the NASDAQ. Okay, that counts similar to the S&P. We have an A down here, and to the June low, a B up, again that August 16th high, and then a 1 down and a 2 up. You'll notice that the NASDAQ has not retraced the 786 like the other indexes have. Like I always say, the NASDAQ leads on the way up and leads on the way down. Okay, so if it was leading on the way up, it would be outperforming the other indexes. It would be more than above the 786, but it's not. It's below it, where you saw the S&P cash and futures are above it, so, and threatening to take out that 2 high. In case of NASDAQ futures, they did. So that's what we're looking at there. So to analyze this further, we've got one down into the October low. We have two up into the 2-2 high. Again, more critical resistance is the August 16th high at 13,181. Okay, and then we've got wave 3 will equal wave 1 at 91.76. We have lower Fibonacci targets below the 1-to-1 equality for wave 3 with wave 1. That's in the NASDAQ. Let's see what else we have. The Dow counts completely differently. We have an expanded flat second wave, and we have the alternate count there in red. But we have 5 waves down for 1. Then we've got an expanded flat, A up, B down, C up. Okay, B goes lower than the start of A, right there. Okay, and C goes above the end of A. That's an expanded flat second wave. A up, B down, C up for the larger wave 2. And then we have a 1 down and a 2 up. And the Dow is sitting at the 786 retracement from its wave 2 high. You can see the wave 3 targets here. 1-to-1 is 30,822. The larger degree there, or the larger Fibonacci extension targets there, the larger degree of trend, wave 3 targets here, okay, where we have a 1 down into this 29,653 low, the expanded flat wave 2 high at 34.72, and here's the wave 3 targets. 1-to-1 is 27,854. Okay, that's a normal 535 ABC correction, or 1, 2, 3. Okay, and there's all of our verbiage there. And we'll look at the bond market. We've been saying how important the bond market was all along, for years and years, and now everybody's interested. But that 4.335% was the wave 1 high from the March 2020 low. We have an A down, a B up, and a C down. C gains equality with A at 3.075. It didn't quite reach it. We can get into this chart here. It looks like C bottomed higher than that. The other target is the Fibonacci 382 retracement. This is from that low in March of 2020 to that high at 4.335. That would be a 0.382 Fibonacci retracement at 2.810%. So the trigger is here. If this low at 3.253% is broken to the downside, it brings these targets in the red into play. Conversely, a move above the B wave high is a trigger, and a subsequent move above this 4.335% brings the target of wave 3 equals wave 1 at 7.286%. That should be interesting. So we'll see. I'm going to see if I can get into that bond market and look at that. I think I may have the NASDAQ on here. This is a little bit of a review, but there's the 1 down, the 2 up. Again, the main point is this below the 786 retracement. Let me get to the US10-year, and there it is there. Okay, you can see that trigger and targets. It's a little messy there. And here is, okay, I wanted to look at this, yeah, from that C wave low. So let's get to a smaller hourly chart there. Okay, let's expand that out so we can look at that. Okay, so from that wave 2 C to a lower degree, we have 1 up, 2 down, 3 up. Let me move that so it's legible there. Okay, 4 down and 5 up. Okay, and then we've got an ABC correction, and that went just beyond the 618. You can see here, and it looks like we're starting another 5 waves up. So we'll see how that goes. Again, this low here, which is at 3.253%, needs to hold for this wave 2 to be complete here. Otherwise, those lower targets, which are here, come into play. There they are there. They're on the bigger picture. Okay, so we'll watch this pretty closely. A move above this near-term high here, it looks like 3.639%, would be the first signal that this low is in, and this move up to the trigger and target is underway. So we'll be watching this closely. We need to see 5 waves up, a correction, and 5 more waves up to a higher high. Okay, so we'll see how how that plays out. Okay, let me see. I think that's it on those. Let me look at these charts here. Okay, here's that hourly which we showed you guys. I think that's about it. Oh, I wanted to show you guys also looking at doing a Discord. Okay, let me bring that over if I can. There we go. Haven't done it yet, but that's the channel or the URL. Looking at doing some possible live trading and some analyzation on Discord. I got somebody setting that up for me, so look for that in the future. It's not up and running as of yet, but it's in the works, and I'm leaning toward doing that. Okay, so let's get you guys back over here. We can leave you guys with that. I think that US 10-year, yeah, okay, we'll see what happens here. Like I said, if this 41.98 is broken, it's not as big a deal as the bigger picture, the 43.25 or 43.2750 in the futures. Let me remove all this stuff, all these tools. There we go. Okay, in the E-mini futures, that critical make or break is 43.2750. A move above that triggers the highs over here. Okay, it's a little bit messy here because we had it set to a different font, but again, here's the move below this low eliminates the alternate count. Okay, the trigger here above that make or break 43.2750 triggers the alternate to 44.6650 for the B wave high. Okay, so we have our upside and downside parameters, triggers, and targets, so we're ready for anything. We'll see what happens. So for you bulls looking for a bullish count, look at the blue. That's it there. You'll need to see a move above this, obviously this 418 high, which is just a couple points away, followed by a move above the February 2nd high, followed by a move above the 43.27 high, which will trigger the higher wave B. Okay, that's it for now. Until next time, take care, everyone.